The following is a presentation of TFNN.
Well, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Your heart is like a magical kitchen. Your heart can create any amount of love, not just for yourself, but the whole world. Open your heart, open your magic kitchen, and refuse to walk around the world begging for love. In your heart is all the love you need. Market-wise, let's take a look at it out here. We had the Dow Industrials down 5, NASDAQ up 14, S&P's up 4.5, gold contract up $4.60, trading at $1,468 an ounce. Silver down 4 pennies at $23.96 an ounce. Platinum up $5 at $1,505 an ounce. Copper flat at $3.31 a pound. Light sweet crude up 22 cents at $95.83 a barrel. Bonds down 14 ticks at 146.20. King dollar up 176, trading out at 82.36. Euro down 37 at 130, and the yen trading up 36 at 99.36. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have? We have a cash S&P at a high, 1617, did $590 million versus $700 million versus $900 million. Bottom line is that, you know what, you're at a high, so that means it can go higher. We hit 1619, we're at 1617, it can go hit it out again, meaning into the 1618, 1619. Dow Industrials, flat market out here today, down $5. NASDAQ Composite, we have what the composite is this. Composite at highs again, up $14 at 3,392. Composite does 1.4 billion versus 1.7. So you're dying on the vine up here, but guess what? You close at a higher high, means you can go to a higher high. Small cap is the only one, once again, that couldn't handle it. Small cap closed at 95.37, and what that did, got over the highs of Friday, closed underneath them. Have a volume of 26 million versus Friday on 51 million versus downtown of 120. So what you do have the small caps, that still can't handle it. Now, what the small caps, that's on a short-term basis. What the small caps did do is they're over 94.96, which it couldn't take out last week, and that was the March 15th high. So we'll see whether it can continue to stay up at those levels. We go over to the gold contract. We look at gold. What gold is done out here is this. Gold got to a price point today of $14.78. Couldn't handle that price. Had 77,000 contracts, which, by the way, just if you want to see how energy is dying, that's kind of how it. You had 77,000 contracts today trying to get into a high, versus 175 last Friday, versus 240 on the 26th of April. Versus 700,000 on the way down. So what you have there is that, you know, that is telling me that, listen, you're going to come back to the bottom end of the range that gold's in right now, and you're going to go test that area. Now, we're going to go to the dollar, because watch this, folks. This is pretty amazing. The dollar index has rejected lower price on a continual basis. And then what it did is this. It took off last Thursday, topside, wide price spread, accelerated volume. Okay. So the dollar right now is at 82.37. The dollar, first off, wants to go to this B point, which is 83.52. But bigger, okay, this is good. This is going to get really interesting to see how this shakes out, and this is why. You know, gold has been in a downtrend for about 2.5 years. The dollar has been an uptrend for 2.5 years. But what the dollar has is this, folks. The dollar has 2 separate ABC structures inside it. You have the one structure we're dealing with right now. That structure there started on February 1st. Now, as you get into the B point, if you get into the B point with volume, and it does the ABC structure up, guess what's going to happen? What's going to happen on a longer-term basis is that it is going to go after a B point that has been in place and started in August of 2011. Now, the cool thing here goes like this. If you happen to be a metal bull, this is exactly what you're looking for. This is why. An ABC structure, when an ABC finishes on the way up or the way down, you do something other than continue the same way. You either contract, you go sideways. When you finish an ABC structure, in this particular case, it could be a 2-year ABC structure, that would be the end of a move for quite a while. So it looks to me that that's exactly what you're going to get laid out here. And that structure, see, if we take out the small B point of an ABC, which started in February, then that means that you're going to get over the larger B point of an ABC structure that started in 2011. And why is that important? Well, that's important, folks, because the price projection on that is 88, which is not the end of the world, by the way, for the dollar. Meaning, but 88, 89, up at that level, then folks will figure that, okay, the dollar's going to go to the moon. All that I suspect would happen at that point is there's a 2-year ABC structure that's finishing. Then what you would see is gold coming back down. The real question is going to be, is it just testing those lows or does it break those lows? But the key here is that when you end a 2-year ABC structure, bottom line to me, that would be that the commodities would start moving again, because then the dollar would have to build cause, go sideways to do something other than continue on the same trend that it was in. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great. You having a good day out there?
Oh, yeah, sure am. Yeah,
cool.
Sure am. How about you?
I am, thank you.
Good. Hey, Tom, can we take a look at that euro? It's just been kind of sitting here for about the last 2 or 3 hours. You think this baby wants to, you think she's ready to go south here?
I do. Yeah, the euro's there, and what's happened with the euro, folks, is that you have since last Thursday, there's been 3 separate downdrafts that are fast and furious. I mean, if you're not shot it yet, you could go. You're at 130.76, and you could get it about 25 ticks. I wouldn't let it get on the other side of 130.101, Tom. Because if it gets to 130.101, then it will spike that whole 130.145 again. You know what I'm saying?
Right.
But it certainly is. What you had here is that intraday today, folks. What happened is that it was a very fast spike down. That spike down was at 10 o'clock this morning. And what you had there is that what that was all about is good old Mario Draghi, which is the European Central Bank chairman. He came out and he was saying specifically what had happened is that when he talked last week, folks, okay, when they brought the rates down, he said that, hey, listen, we can go to negative rates if that's what it's going to take. Then another board member of the bank said, no, he didn't really mean that. Well, bottom line is that Draghi came out at 10:10 Eastern time today, which is about 2 o'clock or 3 o'clock in the afternoon London time, and turned around and says, no, we are going to do anything and everything to basically, get the European economy going, and what that specifically means is that we'll get out on rates again. That's when that euro went. So, I think it's a decent trade, man.
Okay, great.
Okay, man, have a great one. Have a safe one. And, folks, if you haven't come over to our website yet, we just launched the Art of the Charts. And what the Art of the Charts is that it's a charting package that basically does everything that is inside my book. What it also does is that it actually picks up the Gartleys, whether they're bearish or bullish Gartleys, each and every night. So you don't have to go through 5,000 stocks. It does the ABC structures. It does Confluence. We have an introductory rate on the Gartley package right now on the Art of the Chart. It's $59 a month, or it's $520 for the year. We are having a free workshop to explain exactly how this works this Wednesday night. So if you'd like to come to the workshop, or you want to test drive the charting package right now, you can do that by coming over to TFNN. And I just want to bring up, I'll bring up IBM for a second, because when we take a look at IBM, what you have here, which is pretty wild, is that IBM right now, the way that this is setting up is you're up, and if you happen to be watching Tiger TV, I'll show you what you're looking at right now. If you're not, I'll explain to you. What's happening, it's going right against confluence number 1 on the way up. And confluence, folks, is just resistance. It's 2 separate Fibonacci zones, resistance. And then what ends up happening, forget that one. If you set up the other one, it just reached the C point of an ABC structure in the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.